Let's start with various views on performance. First, compared to the publics, specifically looking at end of 2021, when public markets peaked, to the end of Q3 2023. You can see credit, infrastructure, and real estate continue to outperform their public comps. Oh, buyout does too, and by a lot. Venture and growth, however, continue to struggle. A lot of bars here. We're showing the pooled one-year IRR from the last 10 vintage years to look at strategies and geographies. The takeaway, venture capital and infrastructure have been the most consistent across geographies, in opposing directions, while growth and real estate have been the most inconsistent. Credit and buyout have performed well, but geographic allocation mattered. Look at Europe. Here we're looking at fund age. It's not all the same. Think younger funds don't perform well because of J-curve? Well, think again. Over this period, the worst performing and with the widest dispersion are the oldest funds. The sweet spot is funds 3 to 5 years old. Does it matter? Well, think about the impact to your portfolio. Is pacing even? What about the secondaries you're investing in? Portfolio construction, it's important. Let's go back and look at the last 5 years. The takeaway, $1 invested in private equity is worth a whole lot more than $1 invested in public equities. Look at private credit and real estate, which give you nearly the same return as public equity. Here we go back further. Even against the US indices, the strongest performers in the world over the last 15 years, private equity outperformed. In fact, the only underperformer was real estate versus REITs. To one of the more important charts of this overview, the rolling 10-year time-weighted performance, which is how most investors typically think of private equity exposure. You see, in 25 years, there are very few 10-year time periods where private equity didn't meaningfully outperform. Isn't that what everyone wants from their investments? So for those asking, is now the time to invest in private equity? We believe the answer continues to be yes, now is the time.